I could be hopeful, but I think that investors are so short-sighted, and that they're just all momentum driven. Something's going up, people are going to buy it. Like, gold's been sideways for, good 18 months now, and it's hated because it's not moving. The whole mining sector is down from its highs, and no one wants to invest in the mining sector. But the second that changes, then mining's the best sector to be in, and gold's the best thing to be buying. It's all headline driven. It's all momentum driven. I don't think many investors look at fundamentals really to any great degree. I think they're all just wanting to make money. And I look at what's happening today very similarly to what happened in 2000. When we had the Nasdaq boom, the .com boom, Y2K. And then Nasdaq peaks out in March of 2000 at 5,000 points, and it over the next 3 years it drops 80%, and then that lit up the resource sector, and we went into a 10-year bull market in resource stocks. That's kind of what I'm thinking is going to happen. Hopefully, I'm right. We'll see.
So you've said before that there's enough money for the sector at these metal prices to keep exploring, and that's a major change over the last decade when we saw a major lack of exploration. So in your view, have we seen all of the big silver and gold mines being discovered, and have we hit really peak production for the metals?
Well, copper and silver, are challenging because I think, whether we've hit peak, I don't know, because, peak to me is always price related, right? Because all of a sudden, if my theory is correct, that we're going to see triple digit silver, which, call it what you want, $125 or something like that, which I think is a reasonable number. You're going to have a whole bunch more money coming into the silver sector, and a lot of these low grade mines that we know exist, high up in the Andes, that are going to cost $1 billion to build, but they could get built, and if they do get built and permitted first and then get built, you're talking probably about 10 years to get them into production before. Nevertheless, that would add, substantial amount of silver to the market. At $25 silver, there's not sufficient investment going on. And you look what's happening in a lot of the silver-centric countries around the world. They're becoming more anti-mining. You look what's going on in Peru and Mexico. With some recent news, unfortunately, out of Mexico, Argentina, Chile, Bolivia, these countries are, moving to the left and moving, very much anti-mining. So, as a world population who wants to go green, and it's very negative news because, we need this metal to achieve these objectives. And if these mines keep coming offline, the way we see them happening, that's a big problem.
And of course, an important point there is, if we do see, like you said, for example, $125 silver, we need a sustainable run of the price being up there before those mines are permitted and built, right?
That's a perfect, you're dead on that, Tom. I was just in a meeting last night and we're talking about M&A in the gold sector. And, there's still CEOs in the gold sector using $1,200 or $1,300 gold in their analysis of takeover targets. And we haven't seen $1,300 gold for a few years now. So if these executives don't believe that $1,800 gold or $2,000 gold is here to stay for a sustainable amount of time, they're not going to make the investments. And that's one of the reasons why you're not seeing a lot of M&A activity.
So do you see that as a positive or a negative for the industry, Keith, that the guys that are closest to the ground aren't counting in $1,800 gold?
I blame it on the financial institutions and the hedge funds because during the last big run, when gold went up to $1,800 and silver got up to $50 back in 2011, there was a lot of big transactions done, right? And the executive teams of those companies felt they were doing the right thing. They were being pushed by the banks to do it. I remember, being, running CEO for First Majestic for so long. I was getting deals shown to me on a weekly basis. Oh, you should look at this. You should look at that, and all very low grade, high cost, assets, which would take, a sustained long-term high metal price to permit and build and so on and so forth. And I didn't take the jump and take advantage of any of them, but I know a lot of teams did, a lot of mining companies did take on some pretty big assets. And then as the market turned, over the next 5 years, they were highly criticized, for doing what the banks were basically telling them they should do. Mm-hmm. And it was the banks and the institutions who actually funded these acquisitions who came out against the executive teams of the mining companies. So now we're not back into a relatively high-priced metals market, maybe not high price, but better prices anyways. Mm-hmm. And we're not seeing that activity because, in my view, these management teams are paranoid about running into the same problem they did before.
Mm-hmm. So maybe a bit of conservative estimates is actually good for the way that the industry is being run, right?
I suppose, yeah. You probably may not see, some of the big transactions, but look, if you need to be big to build $1 billion mine, mm-hmm. Look at Springpole, the mine that First Mining Gold owns. I'm the chairman of that company, and it's going to require $700 million to build that, and we're 2 years into a 4-year permitting process. How's First Mining going to raise $700 million? They're going to need a partner. They're going to need a big partner to come in and assist with that. So, the big guys have to play. So they need to be using. If we expect to produce more metal, which we have to do to achieve all the things that we want to do as a human race, the mining sector has to be more aggressive.
Mm-hmm. Keith, you mentioned First Mining Gold and also the Jarrett Canyon mine. And you've, of course, been widely known for your focus on silver. So what makes the move towards gold more appealing to you here?
Well, it wasn't a matter of being more appealing. There's a couple of decisions that were made, or a couple of reasons why I made that decision. One was political risk. Mexico is not what it was, 19 years ago when I put together the company. Mm-hmm. I felt it was time for us to step out and look for other assets. We've been looking for silver assets, for the last couple of years, and they're just extremely difficult to find good silver assets. Mm-hmm. Peru is a good place to find them, but I don't want to go to Peru. Mm-hmm. Nor do I want to produce a bunch of lead and zinc. And a lot of these silver assets, are really only 30% silver, and then the rest is zinc and lead. And that's not of interest to me. So a lot of assets were eliminated from our list of the potential targets. This asset was privately owned. Jarrett Canyon was privately owned. If it was publicly owned, I'm sure it would probably had a market cap of $1 billion, I would think, or somewhere around that number. We picked it up for $470 million, and then we feel that it's expandable. So when we look at targets, what can we do to improve the asset? Can we increase the life of mine? Can we reduce costs? Can we increase production? What are the reasons why it's operating as poorly as it is right now? And identify them and see if our talent can make changes to improve the asset. And that's what we do. We're basically turnaround artists. And if you look at all our acquisitions over the last 19 years, we've always bought out of favor assets that were somehow struggling, usually due to lack of capital or lack of talent. And we could bring that to the table. Jarrett Canyon, we think is a perfect asset for us. Yes, it's 100% gold, but it is doré bars, so that's a big deal to have a doré producer. It's the mill has got a 5,000 ton per day throughput, and it's operating at half that number. And we think we can get it up to 4,000 tons by the end of 2023, and our target's to hit somewhere close to 200,000 ounces of gold in 2024, which is basically twice the size of it.